Solana price reveals a negative diversion between the stock market and cryptocurrencies. SOL price is at the cusp of dropping massively as the correlation breaks down. Hi guys, crypto investing here. Before we start, don't forget to give this video a thumbs up and please subscribe to my channel. Okay, let's get started. Should more dollar strength kick in, expect a nosedive move towards $18.66. Solana, SOL, prices flashing warning signs and red lights as price action dips back to the low end near $60, flirting with new lows for the year. With price action under downward pressure, the only real level providing any support, for now, is $58.64, which goes back to May 19, 2021, and saw a clear break on August 16. Once bears can break down the wall of support around that level, expect to see a boardroom opening up for bears to move in, with SOL price at risk of dipping below $20. SOL price at risk of trading below $20. Solana price is cornered as a clear negative diversion materializes this morning during the Asia-Pac session. Where stocks and cryptocurrencies rallied this morning, a dislocation happened overnight at the end of the US session, with stocks rallying to the upside this morning but cryptocurrencies to the downside. Bears have smelled blood and will stick to their position until this triggers panic amongst investors and they sell their stakes. SOL price is thus feeling the laws of gravity as investors cherry-pick risk assets, and it looks like cryptocurrencies are in the penalty box for now. A proper discount needs to happen before investors come back and are willing to pick up price action again. With a break below $58.84, the next level to watch would be the orange ascending trend line near $40, which could hold some importance, although $18.66 is an important technical pivotal level that will spark a rebound. The release of U.S. inflation figures today could spark a domino effect with a small drop as expected, from 8.5% to 8.1%, but an even more significant drop could see investors price out the number of forecasted rate hikes by the Fed and overtly point to less severe monetary tightening, which swings open the door for a rally in risk assets. In financial markets, a single print of economic data could trigger a whole series of events that could spark a turnaround in an asset class. SOL price would see a break above the red descending trend line from April and could be set to test $100 with the 55-day simple moving average and the monthly pivot placing a cap to the upside. Information on these pages contains forward-looking statements that involve risks and uncertainties. Markets and instruments profiled on this page are for informational purposes only and should not in any way come across as a recommendation to buy or sell in these assets. You should do your own thorough research before making any investment decisions. FX Street does not in any way guarantee that this information is free from mistakes, errors, or material misstatements. It also does not guarantee that this information is of a timely nature. Investing in open markets involves a great deal of risk, including the loss of all or a portion of your investment, as well as emotional distress. All risks, losses, and costs associated with investing, including total loss of principal, are your responsibility. The views and opinions expressed in this article are those of the authors and do not necessarily reflect the official policy or position of FX Street nor its advertisers. The author will not be held responsible for information that is found at the end of links posted on this page. If not otherwise explicitly mentioned in the body of the article, at the time of writing, the author has no position in any stock mentioned in this article and no business relationship with any company mentioned. The author has not received compensation for writing this article, other than from FX Street. FX Street and the author do not provide personalized recommendations. The author makes no representations as to the accuracy, completeness, or suitability of this information. FX Street and the author will not be liable for any errors, omissions, or any losses, injuries, or damages arising from this information and its display or use. Errors and omissions accepted. The author and FX Street are not registered investment advisors, and nothing in this article is intended to be investment advice. Luna crash. When explaining this market turmoil, several analysts pointed to Luna Foundation Guard's recent decision to move over 80,000 Bitcoin out of its reserves and onto exchanges, which it did in an effort to maintain the peg of its UST stablecoin. Scott Melker, a crypto investor and analyst who is the host of the Wolf of All Streets podcast, spoke to the significant impact of this, stating that the entire market is reeling. "I think that markets are in a full irrational panic," he stated. Melker elaborated, emphasizing the negative sentiment of many investors. "The pendulum has swung to extreme fear, as it always does. This causes people to sell assets at or near the bottom." Additional bearish factors. Some experts cited several other variables as contributing to the recent weakness in the broader cryptocurrency markets, commenting on how these developments have combined with the LFG situation to drive losses. "The digital asset market is generally unstable right now, mostly due to the volatility in equities," said Brett Seifling, an investment advisor for Gerber Kawasaki Wealth and Investment Management. "The Fed and inflation has caused market participants to worry and liquidity has fallen drastically," he noted, speaking to the significant increases in consumer prices and the uncertainty around how aggressively Federal Reserve policymakers will tighten monetary policy. "Luna's mess has caused more distrust during an already volatile time, which has spilt over into other altcoins." Armando Aguilar, head of alternative strategies for financial services firm Ledn, also spoke to the situation. An increase in treasury rates. Macroeconomic forces and a strengthening US dollar contributed in part to the decline in the overall crypto market, he noted. The LFG sell-off added additional selling pressure and contributed to additional fear on investors. Solana-specific considerations. While some analysts offered broader commentary, others offered more specific input, speaking to variables that would explain why Sol, in particular, suffered such sharp declines lately. "All the new L1 blockchain tokens have been really struggling since the end of 2021, said Gavin Smith, CEO of cryptocurrency services provider Panxora. He specifically mentioned the native digital assets of Solana, Phantom, and Cardano. "The space is becoming very crowded with lots of competing blockchains all offering broadly similar propositions, and none of them appear, yet, to be mounting a serious challenge to the Ethereum blockchain for smart contract projects," said Smith. "This makes them much more susceptible to selling pressure during weak market conditions," he stated. Smith emphasized that Solana's Sol token was already in a vulnerable position when LFG opted to move more than 80,000 units of Bitcoin to exchanges. The Luna collapse fueled already negative sentiment that was present in these tokens. But that was the negative icing on the cake, he noted. Solana was already down over 70% a week ago before Luna started its slide. "Our expectation is that when the recovery comes, that market will consolidate around one or two of these challenger chains. Whether Solana will be in that mix is difficult to say," Smith added. That's it for today's video. Please like and subscribe to my channel. See you next time.